about your frustrations, man. Let's hear what's on your chest. Get it out, because this will probably be the last live stream we do for a little while, because I'll be out of town for a week or two. So
running for the hills just in time for July 13th.
That's it, man. You getting out for the hills, man. I'm getting out of here.
July 13th is my predicted doomsday. That is, for those of you who don't know what's coming, July 13th, that is the next CPI reading. Just to catch everybody up to speed, because I do work in news myself with the financial markets. We had the JOLTS job report come in today regarding job openings, and I think it was 11.25 million job openings there in May, which was down from the month there, 11.68 if I recall from earlier today. It's been a long day. The labor market is strong. I'm liking that. Now, in regards to what Colton and I were just talking about in terms of what's keeping me up at night, well, I have to be brutally honest here, and that is sharing that what I'm seeing on YouTube, what I'm seeing YouTubers talk about day in and day out is garbage. And during a time right now where a lot of investors are losing money because they are gambling in the market, this is not the time to be preaching garbage on YouTube. That's what's keeping me up at night. That's what makes me frustrated. What about you?
I think we're in the same boat, man. We've been texting back and forth. Just to give everybody a heads up, we've been texting back and forth, and I think we're both kind of just trying to figure out what's driving the demand for the garbage, essentially. Like, why does the garbage get so many views and hardcore followers? And to give you guys like a background of what's going on here, Voyager Digital files bankruptcy following collapse of Three Arrows, and a lot of YouTubers were pumping Voyager Digital, getting paid from promotions and just things of that nature. And it's just, I think between the two of us, we really try to create good quality content that's going to effectively impact people's lives in a positive manner. And it's just frustrating to us. I think the growth frustration is kind of where it's at. And it just seems to be that people are drawn to the garbage, much like, moths are drawn to light,
It's baffling to me, because, when I take a look, and I'm a big macroeconomics guy, I think you need to understand at least a macro level overview of what's happening in the market in order to then understand, your investments and make wiser investment decisions. And then I jump on YouTube and I'm like, looking at some of these YouTubers talk about what I'm calling garbage, because they're just, the run-of-the-mill hot stocks of the day. Maybe it's in, crypto space, maybe it's not. But either which way, it's just someone throwing out the name of a hot stock and, hey, you should invest in it and do so now. And then I'm like, for me, because I work in the financial news space right now, and I know like what's happening macro level wise, and I'm like, where's the mention of X, Y, and Z? Right? Like right now, it's 2:00 there in the US, and we have the FOMC meeting minutes coming out right now. Like, investors should be interested in this stuff. Right. But instead, everybody's wrapped up in this Voyager crap.
I think that's the truth of it is like, what are we talking about here? We're talking about things that are actually going to move economics, like things that are going to drive stocks, things that are going to drive yields, things that are going to drive the job market. Nobody could care less. But you write something about, crypto's up 15%, which is fairly irrelevant in the long term of things. And it's just, everybody's interested in that. And it's just hard, because to me, like, I also got to talk about things that I have conviction in, right? Stocks that I have conviction in, and economics are things that I'm very convicted in, because, like you stated, if you can understand the economic backdrop, you can understand how to invest in individual stocks. If you don't understand the economic backdrop, you can't invest in individual stocks. And I want to give you an example. Today, anybody want to take a wild guess why the banks are underperforming today? We talked about it in the last show, but I don't know if you guys saw this. The yield curve is inverted. The 2 to 10 is inverted. And we talked, and I literally stated at the time we went live that the thing I'm keeping an eye on is going to be the yield curve, because that's going to drive where markets are going. And guys, what happened today? Overall, the markets are fairly flat, but you look at, you looked at JP Morgan today sold off when the yield curve went off. It was down 2%. Most of your banks were underperforming the broader markets. And it's in a weird environment here where growth is slowing down here, guys. Like, this is not good.
I gotta jump in here. When was our last live stream? Was it Monday?
I think it was Monday. Monday was our last live stream, I think it was.
Okay, it was Monday. So this is crazy if you think about it, right? Monday was our last live stream. You literally threw out there, like, we should be keeping our eye on the yield curve, right?
Yeah.
For that inversion. On Tuesday, I think late afternoon into the evening, boom, the 2-year treasuries popped above the 10, right?
Yeah.
Like,
yeah.
How, if people were watching these live streams instead
it's crazy.
of a lot of these other YouTubers, you could be making an insane amount, right? Like, over the span of 6 months, a year, 2 years out, right? These longer term investments, value plays.
Yeah.
Not garbage, value.
Yeah, the companies that are going to be here forever and actually dominate the industries that that they're in. So yeah, I mean, so we got the yield inverted. The 2 to 10, the 3 month to 10 years. What we really need to keep an eye on, which that's closing the gap too, really quick. Let me pull up that one. But regardless, you're basically you're basically got 100 basis points between the 3 month and the 10 year. The spread right now, 100 basis points. That's nothing, guys. That's nothing. That is extreme slow growth. That's concerning. And the fact that the markets are actually up today and that banks are not. I honestly thought banks were going to sell off even more with the 2 to 10 spread, because that's just killing them. So
but to be fair, right now they're pretty. From what I'm looking at right now, it looks like the indexes are pretty choppy, and I think that's right now just due to the Fed releasing the minutes, right? But either which way, it's like, if you know what's happening on an economic calendar, right? Like, you don't need to be Nostradamus, and I'm not saying anyone can really predict the future, but like, have in mind an economic calendar of what's about to happen. Keep your eyes on some of the most important things. Remain patient, right? Like, steady aim and just shoot for quality. Like, I don't want to, and I'm looking at Richard's comment, I guess, here. Love the passion. It's not even passion, Richard. It's frustration. At this point, it's frustration.
My life eroding beneath me. Eroding.
Either way, it's going to be a form of energy in there, whether it's frustration or passion. But I mean, it's like, for us, I think, we want to accomplish the other, we want to put people in a better situation, I think, is our ultimate goal. And, we put a lot of time and effort in the research, where I could just pull up any article on crypto right now and just spew. But what I try to do is get the data, digest it, and give it to the viewer to the best of my ability. It's not always going to be right. I'm trying to give true data that's going to impact the economic backdrop of where your money should be going and where money flow should be going, rather than just grabbing something and just blowing it up. That's just a piece of, that's trash. And not everything is trash that people blow up here, but a big portion of it seems to be, and it's just unfortunate. So, but to get back, man, like, long term, where do you see the bottom? Where do you see things kind of come into light here? Where are you seeing the opportunities presenting itself?
So I know I've spoken a lot about this. First of all, on Friday we have the June employment non-farms coming in. That should be really interesting to watch. But the bigger date here, in my opinion, I'm doubling down on it every time I speak, is July 13th. 11th, 12th, and 13th. I mean, I am going to be watching what is happening in the market, how traders are trading, what investors are thinking, like, what's the overall investor sentiment there, because the CPI reading to come will be insanely, I love it. Frustrated lion, you're right.
Frustrated lion, man. Frustrated lion coming in hot.
If this is what it takes, man, I got to be this fired up every time. I mean,
dude, I'm fired up too. I'm fired up too, man. I really, really am fired up.
July 13th, right, the CPI reading, and then moving forward, we have earnings season kicking off, which really, in my opinion, depending on the industry, it could flip-flop, right? I kind of don't yet have the best of feel for how each industry is going to be performing. I'm very curious, But then come the end of the month, I mean, the Fed speaks, the market shakes, and Powell's going to come out. And the vast majority of investors are already, I think, pricing in a 75 basis point raise again. So I think that's definitely going to spook the market.
Run, 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 Charlie, run, 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 no, run, run.
I'm just patiently waiting here. What about you?
I think a 75 basis point hike puts us in recession. I think a 25 basis point hike makes a lot of sense right now for two reasons. One, you stated that job markets are good, but we can start to see that it's coming back down. So we can see that there's some softness coming in the job markets. We know that the consumer is concerned. Consumer discretion is, out the window right now. Investor sentiment is low. So we have all these all-time lows. I feel like a 25 basis point hike with where yields are right now make a lot of sense. And with inflation possibly coming down, I think that would do a couple things. I think that would give some optimism in the market. We could possibly see a nice pop in the market. That would get people feeling a little bit better. We're already starting to see fuel costs come down at the pump. So I think doing a smaller hike would do a lot of good for the market for the short term. And also, I think we don't know what the outcome of this 75 basis point hike is with the Fed's unwinding a balance sheet quite yet. It takes time for this stuff to come through. So my concern is that another 75 basis point hike into a slowing economy won't show itself until probably December or January of next year. And at that point, you can't go back.
What's your feel on where Powell stands right now? Because I personally think he's leaning towards another 75 point basis rate hike. And the reason is because we have a strong labor market. Mm-hmm. I think he feels the confidence enough right now at this point in time to move forward with it.
I think 25 basis points makes a lot of sense because all indicators to me, we've already lost 20% on the S&P 500. We've already lost 30% on the triple Qs. We're seeing oil absolutely collapse. We're watching commodities absolutely collapse. 25 basis points right now makes a lot of sense to me to sit back and see what's going to happen because the first hike is still not impacting us yet. It's going to take time for all that to come through. And the problem is if you overhike, it's too late. We're already in recession at that point. And to me, guys, and you know this, Ari, I think we're already in somewhat of a mild recession and the job markets are just going to be a lagging indicator of that.
I agree. Technical recession-wise here, I mean, the Atlantic Fed already came out. This was last week, or at least when we spoke on Monday, right? That what they were seeing on their tracker was negative 2.1%. It would drop 2.1, I think, right?
Negative 2.1 is where we're roughly where we're sitting right now, and who knows, that could be adjusted again.
So I mean, look, what I've also been really watching is Powell's sentiment when he speaks, right? And he keeps throwing in there that, at first he was like, hey, we can avoid this recession. Here's what we need to do. And if you keep listening to him, I mean, even when he spoke the other week, he alluded to the fact that, hey, we may not be able to avoid a recession. And I think he's just slowly but surely actually preparing us for a recession.
Oh, yeah, 100%.
So that's why I think he's going to hit the home run with a 75 point basis rate hike.
I mean, maybe. I think he's going to possibly do it. I think 25 makes a lot of sense where we are economically right now. I think we're at a breaking point economically. I mean, it's pretty clear we're at a breaking point. No matter what you look at, whether you want to look at consumer confidence, investor confidence, cost, inflation is obviously high, but it looks like it's getting under control. So we got oil prices collapsing. We got, future commodities collapsing. So there's a lot of indicators here showing demand destruction. And I just don't think you need right now to do much of anything. I think sitting back and doing 25 is doing something, but you still could always do an emergency hike later. If it's not enough, you could always come out and say, guys, we're going to do another 25 next week. That wasn't enough. But I think to come out and do 75 and 75, you're shocking everybody. And I think we could have a recession that is undefined like none other because of we're in unprecedented times, right? Every crash is going to be different. Every recession is going to be different. This could be a weird recession where we're technically in a recession And the lagging indicator is going to be the jobs market next year when layoffs start happening. And everybody's like, oh my God, what's happening? Well, we've been in a recession for 6 months and businesses are about to go under. That's what's happening. You know, like, so it's like, it's
we
a
live
different
in a
animal.
reactive world, first of all.
That's the problem. It's so reactive. And it's like, that's, you're hitting on it because if he reacts, right? If he raises 75 basis points and then all of a sudden we're like, oh crap, that was too much. What do you do now? You know,
yeah,
just
going back. To your point, I was just reading earlier today, a recent survey came out that 74% of the consumers that are out there are petrified of a recession. But I just think we're already on the edge. For me, I mean, I know if it was Fed Chair Colton, right, like at 25 basis points, I don't know, you know, what I would personally do if I was Fed Chair Powell. And do you think he's sleeping at night? Like, honestly, do you think this guy's going to bed at night? And
I think he's super stressed right now. He has a huge task on his plate. I think there's just too much uncertainty going on globally, and I don't see. Inflation is already starting to peak. Like, we're starting to see that. Now, I could be wrong and we could have more inflation, but we can always go back and do an emergency hike. They've made it clear
that would petrify investors, though.
Yeah, you know, I think so. I think this is a self-fulfilling recession. I think there's so
100%.
much fear. So much fear. It's just like, so much fear can cause you to do something crazy, and that's what we're seeing right now. So much fear is causing panic selling in the market. It's causing cryptocurrencies, but we're starting to see.
It's calling for this the rallying, right? That's been happening. Nothing as of a week and a half ago, since our first live stream, right? Like, nothing really changed. Yeah. We just took out all of the news headlines, the fear mongering, and all of a sudden we started to get this rally in the market. And I'm like, what? You know, like, that, it doesn't make any sense because macro level wise, nothing changed. And I just think no one's really thinking right now.
No,
that's my
there's not a logical thought process. And, you know, and I guess that just goes to show that there's actually not a logical thought process throughout most platforms that we were complaining about early on here. So I guess it's just fitting that there's no logical thought process. But
should I invest in Voyager? That's the big question.
Hey man, it's at 14 cents now, so you know it only needs to go to 28 cents to double your money. So you might as well just YOLO into that.
What an idiot! Oh, what a loser!
Just saw, you know, Voyager is in bankruptcy. The drama continues, and I'm starting to read the comments, and then I see the subscriber, I guess, of this channel. Right, now's like the perfect time to get in. Yeah. And I'm like, what? Yeah. They just declared like what in what world? In what world? And I don't know how old or young this, you know, certain subscriber was who wrote that comment, but at the end of the day, I mean, please, for the love of God, I'm hoping that this, you know, individual does not throw more money in.
Susan writes, you know, they'll figure it out eventually, learning the hard way, but, you know, and she's absolutely right. I think people are starting to really figure this out the hard way. And it's like the quality companies that you bring up in your video, it's just not even a conversation. Like, they could be down 20%, but you're not worried about them going bankrupt. Like, that's the last thing you're worried about. The free cash flows are strong. The balance sheets are strong. They pay. Most of them are dividend aristocrats. They pay a dividend. You know, they raise their dividend. Yeah, I mean, it's just quality over quality over the pumps. Okay, quality over the pumps is basically what we're trying to preach here.
But you know, look, when the banks, when these interest rates start to rise, what I'm a fan of is the banks are going to be the ones to really profit from that. And you can just ride that wave of recovery up with the banks, the top banks. And I thought this was actually pretty interesting. Among the banks that recently raised their dividends, you know what bank didn't?
Who was it?
JP Morgan.
JP Morgan.
Why?
Yeah.
Because Jamie Dimon, you know, and again, he was talking about this the other week. Jamie Dimon was just sharing that what he is predicting is another, you know, few months here of a lot of red. And so he's full preparation for the worst, planning for the best, right?
Yes.
But already here and prepared for the worst, which I think is very wise.
And like, here's the other thing, like, guys, you know, like, here's the thing, like, anybody that's coming into this, you know, into the channel, you know, smash the thumbs up here. Obviously, we appreciate the support.
Literally,
here's the thing. Smash it, just break that thing, you know. But like, here's the thing: you have Jamie Dimon, right? Been in business, has no, you know, no political qualms, has no reason to fluff anything. You have, you know, a lot of these business owners, whether it's Elon Musk or, you know, Meta doing the layoffs, you have all these flashes of business owners here getting ready for something, but you have the government telling you we're not in a recession. I would rather trust the business owner that's trying to hire people and grow their bottom line than the government, who I don't trust any day of the week. So for me, I'm going to listen to the business owner that is saying, listen, guys, we don't know how bad it's going to be, but there's going to be some turmoil here and we're getting ready for it. I mean, look across the board. They're all saying it, but yet the government's coming out and saying, this is not a recession. This is the strongest job market. And that's great. It is the strongest job market. But the bottom line is, consumer is scared. Inflation is eating away at their savings, and it is concerning times.
100%. I mean, we got to be keeping out for right now what's happening, macro level, and I think, you know, if just YouTube Jamie Dimon, you know, in his recent talks, I think you can find some really good information just listening to guys like Jamie Dimon who are speaking out right now. That's actually a rarity, because as far as I'm concerned, he hardly ever speaks out. Politicians, I mean, here's the business owner, like you said, they're in the game, right? Like, they are the game. They're creating kind of the rules and the game itself. The politicians are puppets, really. And so that's why they're so reactive. And if you just take right now what's happening, I just spoke about this, you know, earlier today in a segment, that, you know, President Biden is now reacting and trying his best to aid in the fight, I want to say, against inflation. And he doesn't really have the bazooka, if you will. That's more in Powell's hands with interest rates. But Biden is gonna, I think, move forward with relaxing tariffs on China.
Yeah, that's the move.
But that, it's such a limited move, right? But he's a politician, so he has to do something, and all of this is actually going to create a lot of criticism, in my opinion, and that may be severely damaging, I think, for his political career. Not that, you know, there's much left to it anymore. You know, not to be negative here, but he's getting up there in age.
Yeah, well, he's getting up there in age, and I think, you know, I think it's pretty clear that it might not be his fault. Like, I'm not going to take political sides here. It might not be his fault what's going on. When we talk about inflation, but he's going to take the blame for it. And I got my opinions on that, and, you know, I think there's a lack of leadership shown, and that in itself can make you lose your seat, in my position. You're talking about the most important part of leadership in our country. You need to step up. You can make the wrong decision, just make a damn decision, man. Like, I'm all about it. Like, make a decision. You know, this halfway, we're gonna see what happens. Like, no, we don't have time to see what happens. Inflation is out of control. Like, you know, we got to start doing stuff now. Like, we're gonna lose power to foreign entities here.
When politics gets involved, it's dangerous, right? Because a presidential term, as we all know, it's 4 years. Okay, and then what usually happens, the next president comes in, and if he's on the opposing party, he's going to basically backtrack everything that just happened. So, you know, I think what's dangerous is if we have Biden, you know, relaxing the tariffs, are we thinking 5 to 10 years out here with that move? And I get it, right? He's trying to relieve, you know, inflation here, inflationary pressures for U.S. consumers, but I want to say we should be thinking longer term politically, because I'm a fan of what Ray Dalio consistently shares, is that we have to watch China.
Yeah, no, I agree. Cal is like one of the most active subscribers on the channel here, and super value investor, always picking up good value. He's a big T-Row guy, so you guys would probably hit it off here. So the Shiller PE ratio, now if I'm not mistaken, basically the Shiller PE ratio is kind of a PE ratio that takes out a lot of different fluctuations in the market and kind of gives you a different type of valuation, more of a flat line valuation without the ups and downs. And anytime the Shiller PE ratio gets too overvalued, I guess historically, I'm Googling it right now, but historically it needs to sit right around 15 or 16%, or 15 to 16 PE ratio on the Shiller. And anything above that is usually pretty overvalued for the market here.
Double that right now, right?
Yeah.
It's much higher.
Yeah, we're at a 28. And so this has kind of been my argument on why I think valuations need to come down. And it's a really good question. I think personally, Ari, I thought the S&P should be trading around 3,700, which would put it around a 17 PE ratio. Now, if I factor in Shiller, it probably needs to be closer to 3,500, which means that there's probably significant, decent to significant downside here. Actually, I think we're trading at a 26 on the Shiller, and he said the average is about a 15 to 16. So let's just use 16. I mean, you're talking about another 30% possibly downward spiral here. I see a huge problem. So obviously we know about, and we'll just go really quick here because I don't want to bore anybody, but we know about all the stimulus we got. We know about zero interest rates, and that caused so much spending that it took a while for us to catch up to all that spending. And what we're seeing is a lagging, once again, it's always a lagging indicator. That's what I hate about looking at past economics, like the jobs report of June. Great, jobs report was in June. We're a week in July, and we've already had like 5 businesses say that they're freezing or doing layoffs. Like that, that data.
What do you think about April?
Oh, it's the same thing. It's just like, it's so late. It's like, dude, are you like, data is so it's so outdated, you know, and even it's only a week, but look at what's happened over that 8 or 9 days. It's been, you know, the job market is so strong, but now, like, I don't know what July could be a completely different story from what we're hearing in the first week of July. So,
well, look, I don't, Colton, I don't know if you just caught my segment earlier today, Tip Ranks there, but I spoke about this actually, literally towards the second end of one of the segments. I shared that, you know, even though the Fed's minutes are coming out today, and they're out now, right? At 2 o'clock, they were supposed to come out. So
yeah, it's getting digested. It's getting digested by the market pretty good here, whatever they're talking about. Yeah.
So, and I would assume that, right? Because it's not really new news. But what I had shared earlier today was the fact that, you know, so you're going to have investors that are sifting through the minutes and looking for the tidbits of basically why the Fed did what they did and the tone that they used. But here's the thing. We already knew that the tone was going to be pretty aggressive, and we know that the tone was aggressive. So we're anticipating the Fed's minutes coming out. Why? Because it's exciting. I think it's something that
it's emotional.
And then you start to think about what Peter Lynch shared one. I laughing when I think about this because I'm a huge economics guy. I love economics and I love looking at the macros, right? But Peter Lynch shared that if you spent 13 minutes a year studying economics, you'll have just wasted 12 minutes. It's true, right? Like I talk all day long about, you know, what's happening, what happened, but like it's not about where we are. It's not about where we were. It's about where we're going.
Yeah,
right? And
that's the argument. You know, so I guess we'll sign off here. It's probably going to be probably the end of July. We could maybe set something up and get back on the horse here. Guys, you know, we obviously love you know, the support and commitment. If you guys can make it, if there's things you want us to talk about, you know, write it in the community chat, you know, if you get a chance.
Entering into a brand new earnings season, probably by the next we're on here live streaming. So if you have, you know, things on your mind, questions, I mean, fire away while we're on the live stream, but also just, you know, either email us or, you know, the community chat, whatever it may be. Let us know your questions, your fears, maybe your concerns. If you're curious about something, maybe in, you know, Colton's portfolio, mine, you know, what we're currently up to, And we'll, I mean, as far as I'm concerned, I'm going to be completely transparent. So, you know, I'm here to help you guys. I know Colton is as well. And we just want to make sure that we're setting everybody up for success to the best that we can.